Thank you for tuning in to another episode of RIA Collective. I'm your host, as always, Charlie Van Derven. I've talked about it a lot, but our industry suffers from a trust issue, right? In fact, if you haven't heard me say it before, it's not good company. We're the fourth least trusted industry in the United States, exceeded only by elected officials. We all get that, car salespeople and advertisers. And I've had an opportunity to work with a lot of advisors over the years, from big bank and insurance to independent broker to RIAs. And it strikes me that the purest client relationships are in that RIA space. Take the commission out of it, take the bias out of it. And the purpose for RIA Collective is to do whatever I can to move our industry to that in that direction and bring better client advisor relationships to the surface and hopefully increase the trust in the industry. Today, I'm joined by Sam Renken. Sam is part of an organization called Consolidated Planning, which actually I know pretty well. Sam's based out of Chattanooga and has a background in big insurance. And so he's going to share his transition story. And something, Sam, that you said in our lead up to hitting the record button here is you want to help people see where they want to finish their career. And that's pretty cool, right? That's a whole different vision. Everybody's thinking so myopic and what's tomorrow? What's this afternoon? And you're looking decades out potentially for a lot of advisors. So, number one, Sam, welcome and thank you for being part of today's episode of RIA Collective. And I'm super excited to hear your story, man.
Yeah, well, thanks for having me, Charlie. That that tagline, helping people figure out where they want to finish. I trained horses for years and had a great mentor in that space who always told me you have to start where you want to finish. The beginning is the beginning, but if you don't have the end in mind, you'll never get there. And that's true, I think, in most areas of life, but I stole that from an individual named Dick Van Pelt, who actually also worked in finance, but raised a lot of horses and is a big reason why I got into planning to begin with.
Very cool. Very cool. Dick's got some good advice. Yeah, very good. Sam, let's talk a little bit early career. You shared with me as we were getting acquainted a few weeks ago, really what led to the mindset and the shift in where you wanted to go with your career. Talk to me about that early career environment and let's lead that up to some of the things that happened that led you to making some changes.
Okay. I started my career working for a big company that focused heavily on insurance in the front of the process. And I learned a lot while I was there and was surrounded by incredible people. But one of the issues I had with that model from the very beginning is that there was a lot less conversation on the front end with clients, a lot less relationship building. And what happened as a result of that is a lot of the individuals that I started with a big class of people who wanted to get licensed and become a financial professional. And a lot of those individuals simply didn't make it. And watching that, I had been teaching college prior to that and the university of more tenured professors around you who really wanted you to get in your rhythm and find your success. And they would certainly not accept an abysmal retention rate. And that's one of my biggest issues with financial service in general. I believe that if someone really has the heart and spirit to help others, the connections will come. They can find the individuals to build a practice around, because we all flock toward people that we know and respect.
Yep.
And our clients are people too, so they are going to flock to someone that they see shades of themselves in, that they can have a dual lines of respect with, where they can push back on recommendations, but also can hear recommendations and absorb them in a way that allows them to ultimately make the best yes no decision for them, for what they want to do with their dollars moving forward. And so early on, I'm a poet and I have a master's in literature and an MFA in creative writing. And
Renaissance man.
when I started in financial services, I didn't imagine I would be 15 years in. I thought it was something I would do to write a collection of poems because I felt like I would hear great stories. And my first years in the industry, that's really what I was doing in all my first meetings, is trying to understand who I was sitting across the table from.
Cool.
I still ask of all my clients, what do you love? And people respond one of two ways. But usually it's like, what do you mean? What do I love? And I'm like, I don't know. I just want to know what you love. Like, what are you absolutely fired up about? What starts your engine in any given day? Where if you could only do that, would be ideal for you. And it's funny, that question.
Yeah, cool question. Do you run into people, Sam, that don't really know how to respond, that don't have a what do I love, that they're just going through whatever life's motions are?
That's the most common response, Charlie. And
I bet.
it's funny. I think people, I'm definitely a professional. I love what I do. I'm great at what I do. I just believe that I really can't do my best work unless I understand the triggers for the individual I'm trying to help, because I'm not them. I'm just trying to act on their behalf or help them act on their behalf, really.
I'll share with you, Sam, we've only had one conversation prior to today. And we bonded over we're both girl dads, right? Before we hit the
Yeah.
record button, we talked about beards and mustaches. You're an outdoors guy. I get a chance to talk to a lot of advisors, right? Whether it's through the business or through the podcast or whatever that might be. I felt, and this is just a credit to you, I felt like there was a connection with you through the Zoom screen that, frankly, most people I talk to are advisors that I enjoy, and mostly I enjoy people. You and I, it felt like there was snowboarding, right? We talked about snowboarding 20 minutes when we first met. It's those type of connections, and that's that real piece of who you are that makes you successful in what you do. Early in my career, when I was working for other firms, I'm not a corporate guy. In fact, I used to say my 17-year-old self would have kicked my 27-year-old self's ass because I was a fish out of water. I was selling websites and boardrooms at the major wirehouses, and like, how did I end up here? How weird is this? There was very little authenticity, I felt like, in that moment. Yes, they needed websites. Yes, I could provide them, but there wasn't a lot of human connection in that. And largely it wasn't them. It was because I hadn't grown up enough to be authentic yet. I was filling a role that I thought I was expected to fill. And it wasn't until I hit that stride that things changed professionally.
I think that same thing happened to me, Charlie. Like, I was fortunate to start in the industry where I already knew who I wanted to be when I grew up. I was already doing it. I wanted to hear great stories, relay great stories, and help people along the way. I think of myself as a teacher. And when you ask everyone what they love, and then they are vulnerable with you and they share what really makes them tick, it begins to become apparent what you need to do to actually help them accomplish that. And in our world, in the advisor space, if we could help people grow net worth and make sure that along the way they are deploying the dollars that they're saving to their highest and best use, and feel confident in the competence that they have toward the plan that they're chasing, those relationships don't ever go away. just grow over time. That part of what led me to look outside of the bigger company where I started just had to do with the professor in me in some ways.
Oh.
I've been training advisors, I don't know if helping advisors develop themselves for 15 years now. And early in my career, I ran a lot of joint appointments with advisors, and that's what I was told to do by the company. That's part of my metric. And I didn't really question it. I didn't think about the impacts of that over time for the individuals that I was trying to develop.
Yeah.
And one of the main reasons I didn't think about it is there wasn't a structure for me to actually coach ahead of engagements so that advisors could be confident in what they were going to present without having someone with experience right with them all the time. And when I was like a graduate assistant, I had a really great mentor in that space he's a novelist and a really terrific writer and very confident in his ability to help someone like me stand up in front of a room and do a great job.
Cool.
He never shadowed my classes, for example, and I asked him about that like years after I was already done working with him. And he said, if I show up in a lecture hall, now all of a sudden I'm just, even if I'm at the back of the room, I'm stealing some of your authority. And I never wanted to do that. Like, you were there on purpose.
Yeah.
When I started looking and exploring what I could do, where I wanted my career to finish, there were a couple things I recognized straight away. If I could help advisors, people who wanted to start practices, if I could help them really find their stride, get to a place where they're running at the speed that they want to, they're building the business they want to, by coaching instead of shadowing, they would learn more.
Yeah.
Having to experience the full weight of every success and every failure.
Sure.
And I started talking to people about how do we make what we're doing more repeatable? What would be the syllabus, for example, if I were going to teach someone with an advisor's license and client base, if I were going to teach them how to be better at the craft, what steps would I take that person through? In the university, it's like Finance 101 through Finance 404, and then you get your MBA. But each one of those classes, there's curriculum that you go through, and it's actually very prescriptive. And I found early in my career that was not the case. It was, most companies have a path that you can run on, but most companies actually have more than one that you can run on. And the advisors who've been doing it longer often have their own style and their own workflow, and it doesn't necessarily align with what a company like Consolidated Planning might want for an individual to learn about philosophy, about running great meetings when they started. So when I met Andy Brinsfield for the first time, one of the things that really stuck out to me was that the organization itself follows a planning process that is absolutely repeatable. It has, at this point, we basically have a syllabus for any given meeting that anyone would want to run. And it doesn't matter what your experience has been. I could have you ready to run one of my meetings, Charlie, tomorrow. If I had a meeting I couldn't be on and I knew that we were covering this topic. I could show you a planning deck. I could create a meeting agenda in the software itself. I could coach you on the emotional blueprint of those clients, and all the math and science would be in front of you. And we could even schedule out the workflow for that meeting so that then if we were to practice at 4:30 this afternoon, you and I, what you were going to say to the Smith family at 10 tomorrow morning, you could show up, start that machine, and begin to work through it. And you would obviously do it differently than me because we're different people. But at its core, the outline for what we're trying to accomplish from an educational perspective, from like a consulting perspective, it would be very close.
Yeah.
And I started looking for that because there's cause for all types of financial products and really anyone's balance sheet. We all need to make money with our money. We all need to protect our ability to earn an income. And most of my clients, when they show up, they have engaged with transactional advisors from companies. And often they have more than one individual in their world. They have someone who started straight away talking about protection, talking about life insurance, disability insurance, long-term care insurance, and they never really got to the investment side of things. So that client then went to an investment advisor that works for a company, and all that person talked about is how are you putting money into the market? How should it be allocated? And actually, both of those things are really important and shouldn't be ignored.
Yeah.
But there's, from our perspective at Consolidated Planning, actually a step before that. It's the blueprint. It's how would pieces coordinate, and are they coordinating at all now, or have they each been implemented in a silo where they're really just product sales,
Right.
and 3 years, 5 years, 10 years down the road, the consumer isn't sure why they made that decision because they've not thought about where they're trying to finish. They only thought at the time, where should we start? And then that snowballs, and no one's really talked to them about how that will end for them.
You get further and further from the ending the longer you go down that path. I want to say, because I've had an opportunity to work with a few advisors from Consolidated Planning. One of the things I respect about, and I've met Andy a time or two, one of the things I respect about the organization here with Sam is every advisor I worked with was completely different, had a completely different focus on where they wanted to end their career, but they had all the support of a large organization like Consolidated Planning. So I've got nothing but great things to say about my interaction with the business and with the individual advisors that I've gotten to work with over the years. So you landed in a great spot, man. Lucky to know Andy.
Yeah, thank you. I feel fortunate. And I think that we talk about CP family a lot, and we have fundamentals that we follow. We're all very different. All the advisors that call themselves CP family are all very different, but we share some common characteristics. We all want to start through a planning door. Like, what's the blueprint for the plan? Where are we trying to go? We all really value who we're serving and why. We're certainly great at putting together financial plans. We manage a lot of assets as a firm. We sell a lot of insurance as a firm. But all of that starts with a person that we're serving first. And that shows up in big ways when you have life changes that happen. Like, I just moved my family this summer to start a team of wealth managers in Tennessee. for consolidated planning. And all my colleagues in the firm, their questions weren't about my plan for starting that team. They were about, how is that transition going to be for your family? How are you talking about that change? And what prompted it? And what are you excited about? And those questions, especially before I got into financial services, I'm not very corporate either. So I thought it would all be much more, I don't know, rigid and less focused on looking forward to the next time we all get together in red. I think we do a great job of that. And our advisors have that in spades, that we really are here for the long term to build a practice that hopefully there's an advisor behind us coming up at CP that'll eventually want to take the reins from us and make it happen for the next generation of clients in the wake of the work we're doing today. I think that's very rare. It's an organization that's not dog eat dog. Much more collaborative.
That's very cool. Sam, before we wrap here, I want to see if we can't get a little advice to maybe a younger advisor or an advisor coming out of one of those big environments that's looking for something a little more pure, let's say. That might be the word. As you made the departure, were there things that you did well? And then the flip side, maybe things you would do differently had you had the chance to make that change again?
I was very nervous about moving my practice.
Sure.
Yeah. One thing the industry does well is make clear that when you leave, you don't leave with what you've done in the past from that company. And what they're talking about is product sales, most commonly. Right. You don't leave with the power of that reoccurring asset revenue. You don't leave with the power of those renewals that you've built over a 5 to 10 year period. And so I was nervous about that. I would go back and tell past Sam that what you do leave with is everything you've learned along the way and all the people you've actually helped. Yeah. Because those people that you help, they will call you. They will call you and ask you, why the move? What's up? Tell me what's good in your world? What do you love about what's going on now? And I underestimated that, frankly. I didn't move a lot of the clients that I had at my last spot. I'd been in a development, a managing associate development role. And so I was on joint cases with other advisors. I really didn't want to disrupt the good work I had done. I just knew that if I kept my head forward, I could do great work in the future. I found that a lot of those individuals who I'd worked with in the past reached out to me. Cool. I would also tell past Sam, you have a beautiful opportunity to start from ground zero and build it how you want to finish again. I took a lot of the lessons that were really crash course in my early career and implemented them into the business that I wanted to build and sit on to sunset my career. Cool. And so there are some relationships that every relationship has power, but there are some relationships that weren't as valuable.
Sure.
And I don't mean monetarily. Maybe they were taking more time or they were less in my wheelhouse than they should have been. I really was able to focus and find the exact type of client. I like to work with business owners, with everpreneurs, individuals who are buying and selling their own greatness over time through a business. And I don't know that I would have found that focus unless I had taken the time to really look at how do I want to move this. If I'm building it one relationship at a time, what are the relationships that are really going to help me become who I want to become in the industry, which I want to be seen as someone who can help advisors develop the skills around serving the clients that they want to serve. I want my clients to think of me as an individual that they can get on a like on the phone. I don't want the sun to set on a day if someone calls me while we're on this call. Before I hang it up for the day, I want to follow back up with them.
That's cool.
So I think that, and there's nothing wrong with transactional sales if they fit inside a plan. In fact, I have found that if you put together a plan, the transactions, the decisions clients make to move dollars, whether that's from an investment or a protection, like side of the house, those decisions are rooted in a belief system that's not company based, it's consumer based. Yeah. We're really acting on their behalf. So the move to consolidated planning really helped me see that differently too, as opposed to being pushed toward one type of transaction over and over at volume.
Yep.
I began to think of, if I were only going to serve 2 households or 2 business owners a month, how would I focus my energy around really serving them in the best possible way and leaving no stone unturned? And we talk about, marketing talks about going deep, this vertical marketing. Planning is the same thing. If you're constantly chasing a transaction on either side of the house, whatever you're saying yes to, you're saying no to something else, and you may be saying no to the depth of work you could do for your best clients. I would tell people to push back on the organizations that they're thinking about joining, because I agree with you. Financial services has changed a lot in the last 15 years. In the next 15 years, it will change a lot again. And I think having flexibility around how you interact with clients is pretty important. At Consolidated Planning, we have an RIA side and a broker-dealer side, and we have a track that, however you wanted to build your practice to serve your client base, we would support that and help you find the speed that you need to be at to do the best work individuals you're serving. I think that flexibility is really important, because I don't think any of us know who knows what a podcast will be like 15 years from now, Charlie.
Probably easier to produce. I don't know. It's getting easier and easier, man. Sam, you're a super thoughtful guy. I appreciate that a lot about you. At some point, we'll take a run together on the snowboards one day, I'm sure.
Oh, yeah.
I look forward to that. Listen, if any of our listeners are interested in reaching out to you to learn more about consolidated planning or hear more about your story, you cool being a resource for them?
Oh, yeah. I'm an open book. Like my cell phone number's on LinkedIn and I answer my phone.
Yeah.
I'm here to help people, and I love people. I love making new friends. I suspect we will have to hit the slopes sometime.
Okay, man, that's
Charlie,
it. I got a trip to Revelstoke planned this winter, Sam. If you got time at that week, you're invited, dude.
Right on.
Yeah. Yeah, that'll be a bucket list. Maybe we'll do a little heli skiing or snow.
That sounds incredible. Yeah.
Yeah.
Nothing like feeling small out there in the world.
I know it, man. I know it. We do one of those a year. I try to take 2 or 3 ski trips a year, snowboard trips a year, but one's epic, and Revelstoke is epic this year. So
that's awesome.
Sam Renken, man, it's good to know you. I'm glad we got to connect a couple of times. And again, check out Sam on LinkedIn if you want to get in touch with him. He's very active there. That's how I met him. And do a little digging on consolidated planning, man. That's my experience with the firm over probably the last 4 or 5 years has been nothing but positive. Sam, thanks, man. I appreciate you joining me today.
Charlie, thank you for your time. Grateful for you. It's
Thank you.
nice to have a conversation.
Always thoughtful,
Yeah.
thoughtful conversation.
Yeah. If I can ever help you, you let me know. I'm only a phone call away.
Same here, man. Same here. Probably a LinkedIn message is easier for me, but yeah,
Yeah.
either way. So for everybody who took the time to listen to me and Sam have a chat today, I hope you learned something. I hope we brought some enlightenment to your, I don't know, to looking at what the end of your career looks like and laying the path to get there. Sam, thanks again, and thank you all for tuning into another episode of RIA Collective.
Take care.